All right, so I think majority of the people have come in, so let's just get started. So as you guys already know, today's event is Understanding the SEC with Commissioner Roisman. So I'd like to start off by thanking Commissioner Roisman for joining us and thanking all of you.
My apologies. I accidentally muted you.
Oh, was I on mute the whole time? Nope.
No.
All right. So you heard that intro, so let's get going. So, this guest speaker event is brought to you by StreetFins, an organization dedicated to solving financial illiteracy, right? So, we do this in two parts. We have our media, so we put out news articles, infographics, podcasts, pretty much anything that a media company would do. We do that for you guys so that you guys can understand all the top financial news in a simple way, right? Finance Simplified is our whole motto. The second side is our club network, and so that's how we connect a bunch of students, so bring together hundreds of students, a bunch of clubs from all across the country, and that's how we're able to get huge guest speaker events such as this one, competitions, and just many more opportunities for all students interested in finance, right? So if you want to learn more about all the things that we offer and what all we do, check us out at streetfins.com. Oops, streetfins.com, streetfins on Instagram, and the Finance Simplified podcast. Also, make sure to join our Discord. That's the first place you're going to be getting notifications about everything. Link, Ben, if you could drop the link in the chat, that would be great. So make sure to join our Discord. There's a lot of great conversations about stocks that goes on there pretty much every day, all the latest market action. So you definitely want to be part of that. And yeah, without further ado, let's get started. So Mr. Roisman, would you like to introduce yourself?
Sure. Hi everyone, and thank you, Raul and Ben, for having me. As I was telling you guys, I'm really excited to be invited to this. I, I don't get to interact very often with people of your age and, frankly, of your expertise, especially in social media. So if you take nothing else from today's discussion, it's please engage with us. I was very excited to hear from you. You guys have a lot of insights that I'd like to gain. So my door, at least my virtual door is open. So you guys can certainly reach out, and I'd love to continue the conversation. So before I talk a little bit further, I have to always kind of give a standard statement, which is my views are my own and don't necessarily represent that of the SEC or my fellow commissioners. And the reason I have to say that is because when you work in the government, people take you really seriously. And so if somehow I say something, people might think that I speak for the entire SEC, and that's not the case. I'm speaking on my own behalf. But I want to talk a little bit about today about what is the SEC, and then answer some of your questions and hear from you. So I'll be very honest. When I was in high school, I thought of the SEC as the Southeastern Conference, which is a pretty big, football powerhouse. I didn't really know who the Securities and Exchange Commission were. So my hat's off to you guys already, because you guys are way smarter or more engaged in investing than I was. But the SEC was formed in 1934 and was the outgrowth of the stock market crash of 1929. Congress was very upset, obviously, with what happened, and then they passed the Exchange Act and created our commission. And so we are an independent agency that is comprised of 5 commissioners. What do I mean by independent? That means our actions don't have to be approved by the president. We have been given power by Congress to make our own rules and enforce them. And the way it works is whoever's in the president's party gets 3 seats on the commission, and the other side gets 2. So it's a bipartisan commission to ensure that things are always balanced, and it requires bipartisan discussions. So what do we do as the SEC? We are tasked with overseeing the US markets and the securities markets and who participates in them. And if you're here, you probably know what are securities, but just broadly speaking, they cover stocks and bonds, and they're investments and investment instruments. And we at the SEC have a 3-part mission. Our mission is to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. So what does that mean? Protect investors. what do we do by how do we protect investors? Part of it is we go after bad guys, and when they break the rules, we fine them. Unlike probably many of the things that you see in television, I don't have a SWAT jacket. Our people don't have the ability to throw people in jail. What we do actually is we sue people, and basically if they made money off of things that are illegal, we go after them and get that money back, or we stop them when we see there's a fraud. The other way we protect them is by investors, is by giving them enough information from them to make informed investment decisions. And lastly, we also educate people. That's another way that we protect investors. Maintain fair, orderly, and efficient markets. What does that mean? Basically, when you guys buy or sell stocks, even though you push a button and you get instantaneous, acknowledgement that you either bought or sold something, there's a lot that goes into it. There's plumbing that makes it touch several different market participants along the way to ensure it. Our job is to make sure that the pipes work well so that buyers and sellers can meet. And then the third part of our mission is facilitate capital formation. What does that mean? It's just fancy words to basically say, how do companies raise money? How are we able to help companies get access to our markets? And that's kind of our three-part mission. We accomplish it through 4,000 people who work here roughly. And there's a lot of different divisions and offices that do a lot of different things. So we have a division of corporation finance. They're the ones that review the public filings of companies like Apple and Tesla. They look at IPOs, they look at mergers and acquisitions, and they look at all the financial statements that companies provide. We have a division of investment management. They make the rules for investment advisors and funds. So mutual funds, companies like Vanguard, BlackRock, T. Rowe, all those folks. Then we have a division of trading and markets. They're the division that oversees the rules on how people can sell and buy shares. So they're the ones who are in charge of the plumbing. And they also oversee how exchanges function and operate. And then the other group we just talked about was enforcement, which is the group that brings cases against people who violate our rules. And unlike in other countries where the regulator that's in charge of securities is often in charge of other things like futures and other parts of the markets, we're really only focused on securities. So, and we exercise our authority through making rules and by enforcing our rules. So that's kind of how that's what we do in kind of a broad scope.
Yeah, thank you. I think that answered a lot of questions right off the bat. So now let's talk about how you got involved. How did you end up as a commissioner at the SEC?
Sure. So I like to say there's no real clear path to how I got here. I still really pinch myself. I don't really know how I got here. But it wasn't one thing. And so the way I ended up here was it's a series of different kind of jobs. So when I first went to law school, I really didn't know what the SEC was. And I went in to basically thinking I was going to be a Native American lands claim lawyer. Talk about like a totally different thing than what I ultimately did. But after law school, I worked at a law firm, and I worked in corporate practice and mergers and acquisitions, which means helping companies buy and sell each other, grow, and I really liked it. And out of that job, I got a job at the New York Stock Exchange. And through that, I learned more about the SEC, even more about stock trading rules, and helped kind of work on public companies' IPOs, and then also working with board of directors and management. And then I worked with someone who ultimately became an SEC commissioner. And that person called me up and said, hey, would you like to move from New York to DC to become my counsel, someone who tells me about the rules and gives me advice on the policies. And I will always remember this. I laughed at him and I said, absolutely not. That's a crazy idea. Why would I want to move from New York to DC where I think government's not working so well and I don't want to leave such a great practice. And he basically told me, he said, you always complain, but put your money where your mouth is. And if you want to actually make some changes, come down here and help me make changes. And so it took 6 months. I managed to convince my wife to move down, and we've been here since. And after I was a counsel for a commissioner, I got an opportunity to work on the Senate at the Senate Banking Committee, and then I effectively was the head lawyer for that committee. And then I was asked if I would be interested in a position as a commissioner, and I jumped at it. If I were to describe it in a few words, I would say it's a privilege. Every day I walk in, I am so thankful to work here in a place where so many people care about our markets and helping companies grow and investors ensure that, make sure that they have enough information and ultimately the ability to save for retirement and other life events. So it's not a path I think anyone necessarily ever had before, but it worked for me. The key I'd say for everyone is just one, always be nice to people, and two, I'd say always, if you have an interest, trust your gut. Even if it ends up something that doesn't be successful, you can't go wrong with that.
Definitely good advice for everyone to follow. So when you look at, government going after companies, you hear of two big agencies, the SEC and the FTC.
Yep.
So how are these kind of similar and different from each other?
That's a great question. So FTC is really worried a lot about competition and what people ultimately say. And so we share similarities where we're both often we can be going after the same entity, but for different reasons. We both have a different kind of rule set and authority to go after people. And it's the same thing for a lot of the other agencies we have, whether it's the CFTC or the OCC or the CFPB. But the key is we're all kind of, we each have a different kind of mandate. So at the SEC, we're concerned about securities. At the CFTC, they're concerned about commodities. And sometimes, the underlying bad acts have some kind of connection between all of us. But we're pretty, I look at it as like we each have our own silo, even though ultimately we share the ultimate goal of, ensuring that there's not any fraud in the market or any bad acts.
Okay. And so earlier when you were describing what exactly the SEC does, you mentioned that one of the big focuses is protecting investors. Mm-hmm. So what exactly do you protect investors from, and how do you go about doing it?
That's a great question. So I think the way I look at it, the rules that or the laws that implemented us and what we're supposed to follow, they're based on this simple and straightforward concept, which is everyone should be treated fairly and have access to certain facts about investments and about those who sell them. And we do that through disclosure. Disclosure is a fancy word for basically saying people need to provide information to investors that is important enough for them that they feel comfortable making an investment decision. And so we protect investors by making sure that there is a level playing field in terms of relevant information so people can make that decision. And when people either use that information or use information when they're not supposed to, we go after them, or when people don't provide relevant information, we go after them. So disclosure is kind of a critical piece in how we protect investors. The other one's obviously enforcement. If there's bad actors, we'll go after them and we'll prosecute them, and we'll get fines or prevent them from either being in the industry or from doing certain things. So enforcement's another way. We're also constantly on the ground examining market participants. So we're taking a proactive approach and saying, hey, this is an area we think that is potentially being abused. How are we going to focus on it? We've done a lot in terms of elder abuse intervention. We do a lot of education in that space. Part of my job is honestly to publicly speak about these things and get the word out that there's A, bad actors out there, and B, here are some things that people should be on the lookout. And I'd say everyone, at least in my experience, elder abuse, especially in the financial arena, is just getting more and more prevalent. And so I think it's one of those things, we have a really important role to do it as a regulator, but it's important for all of us to kind of like come together and I'd say crowdsource ideas of how we can potentially stop it from happening in the first place. Part of that's education, part of that's intervention.
Right. So when it comes to these actions that, label someone as a bad actor, what exactly are those? So what actions force the SEC to take action?
Great. No, I like that. So essentially, the way it works is we have a set of rules, and if if there's either something that we get made aware of, whether it's something that happens in the marketplace, whether someone sends us a tip or a complaint, whether it's something that we're reviewing just internally and say, hey, this could be a problem, we will go essentially investigate. And so there could be many things that lead us to an ultimate investigation, but once we start it, we then have to make a decision on how we're going to approach it and whether we're going to, whether we're going to bring a case or not. But once we do, if we decide it, we bring it in court or in front of a judge, something called administrative proceeding, and then we'll either we'll charge them and we'll either ask for money back or some kind of fine, or basically prevent people or companies from continuing to have the privilege of being in our markets. So we tend to try to stop fraud as quickly as we can. Ultimately, we hope to prevent it from actually happening. But when we find it, we stop it and we go after the wrongdoers and try to make whole the people who've lost money.
Okay. So does the SEC have direct policymaking power, or does it need to run by Congress, or how does it work?
So it's a great question. So we actually do have the ability to make our own rules, but we also sometimes advise Congress when we sometimes say, hey, we don't have enough authority here to actually act. It'd be great if you guys pass a law and give us that authority. But other times, Congress gives us a requirement to do. So they'll pass a law that says, for example, SEC needs to write a rule requiring the companies talk about how much their top officers make. And so that'll be a law. Our job at the SEC is to interpret that law. So my question is, what does that mean? Am I supposed to just talk about the cash they get? Is it the cash and the stock they get? Is it the cash, the stock, and the private jets that they get to fly on? All these things are different things that are unclear from just them saying how much compensation these top officers make. And who is the top officer? Is it just the CEO? Is it the CEO, the CFO? Is it all the management? So it's this ability for us to kind of interpret the law that gives us a lot of policymaking authority. And just similarly, we also have policy authority through our enforcement of our rules. So it's not, we don't like to make new rules through our enforcement decisions, but what it is important to show is that we can enforce the policies that we have in place. It's another tool that we don't necessarily need Congress's help. We can do it on our own.
Okay, so kind of like a standalone agency.
Yep, perfect. That's exactly right.
So we talked about the enforcement just briefly. So you talked about how you can, bring them to court, sue them, make them pay some fines. What other enforcement tools do you have at your disposal?
Yeah, so primarily that's it. So we have things that we can injunction, which means you guys got, you company or individual need to stop actions here. We can seek something called disgorgement, which means did you make, ill-gotten gains from your actions? We'll try to take it back. And often we pair that with the ability for us to return money to investors. We can also impose penalties on companies. There's also something I like to call, we can pull their ticket, meaning you guys have acted in such a way that we're no longer comfortable with you being in our markets. So we're going to make sure that you guys are banned from participating in it. So we work with that. We also actually work a lot with our criminal authorities. So if we think that there's something that's also not just in our area, but with the criminal authorities, we'll refer them to them. And what often, unfortunately, happens is there is a criminal element, and some of the people we go after, the criminal authorities, end up putting in jail for long periods of time.
Okay, so you have to kind of work with everyone in order to make things happen.
That's exactly right.
All right, so our next question is, does the SEC's influence reach all companies or only public companies?
Yeah, so I remember when I realized this, I thought it was just, public companies. But the reality is, so just for everyone's reference, a public company, when I talk about it, I'm talking about a company that is listed on a stock exchange. So like on New York Stock Exchange or NASDAQ. But before they're public companies, often they're private companies. So we actually don't regulate public or private companies. We actually regulate securities. So it's a little bit more of a subset. So if public companies have publicly traded securities, which they do, we regulate them. But not all private companies have securities. So if you think about it like the local garage mechanic or the local pharmacy, that's a private company. That's a business. But they don't necessarily have securities. So we don't oversee them. What we look at is, do these people have securities, meaning investment instruments that they've sold to other people? And in certain instances, we would review them if they're private companies. And a way to think about it is also, look at a recent IPO, like Bumble. Bumble is a recent IPO, right? So before they were a public company, they were a private company. And the way that people, they raise money by selling some of the securities. We oversee them in the sense that we oversee how they sold those securities. And if they, did that improperly, then we would have a case to bring against them. But they don't have public company disclosures that public companies do. So we do oversee the private markets, but we're really well known for overseeing the public company markets.
And as a kind of extension of, protecting investors and, focusing on securities, does your influence and oversight also extend to trading apps and platforms? So, for example, Robinhood and, E-Trade, all the ones that people commonly use.
These are great questions. So yes, we do. So the way we do it is, if there's certain platforms or apps that help trade securities, they usually have to register with us, whether there's something called a broker-dealer or investment advisor or an exchange or an alternative trading system. These are all things that somehow trigger us if there's our oversight. If there's somehow people buying and selling the stocks, they have to kind of be connected to us and oversight by us. So even though technology has obviously expanded the ability for people to buy and sell stocks, we have maintained our ability to kind of oversee these markets and new market participants.
All right, that's good to know. Somebody's always watching out.
Yeah.
So I'm not sure about this question, but what are some recent actions taken by the SEC to increase equality in the stock market?
That's a great question. So I think, as I mentioned before, I think that the first thing I always think about in terms of what our laws and the federal securities laws do is that we're based on this concept that everyone should be treated fairly and have access to certain facts about investments and those who sell them. So we achieve that, again, through disclosure. So I think that's one where we're trying to create equality of information and making sure people are all treated the same. And then another way is just making sure that our rules aren't allowing people to use information to their own advantage. So for example, that's what our quote unquote insider trading rules are. So the way I think about it is, let's just say you have a CEO of a company that owns a lot of shares in that company, and that CEO realizes they're about to have a really bad quarter because of the information they got from being the CEO. That person can't sell all of their stock with that information, without sharing that information going out to the public. And if they did, we would probably bring a case of insider trading against them to make sure that that money is brought back and this person doesn't take advantage of that inequality of information. The other way I think about it is, you think about companies. We talked about public company, private companies. There's a whole host or range of companies that are using our securities markets, from the Amazons and Apples of the world to the very small public companies and others. They're all different. They all have different ability to kind of raise money. If you're a really big company, it's really easier to get money than it is if you're a smaller company. So one of the things we've been kind of focused on is, we have a new Office of Small Business Advocate. It's led by someone named Martha Miller. She's fantastic. And And she is focused on what can we do to help smaller companies access our markets and raise money so that they can grow. That's another way. And then a big thing is we're trying to do a lot of outreach and investor education. In terms of, within the agency, in terms of quality outside of the marketplace, we also have the Pam Gibbs, who's the head of our Office of Minority, Women, and Inclusion. She does a fantastic job. She provides leadership and guidance for our efforts to leverage diversity and inclusion throughout the agency to enhance our mission. So we're focused on it in many, many different ways.
Okay. And this next question isn't exactly related to the SEC, but I think a lot of our, attendees would be happy to hear an answer to this. What is some advice that you have for people who are either just getting their feet wet or have a little bit of experience, not too much?
Sure. So this is really truly my advice in my personal capacity, because the SEC, we don't provide investment advice. But I can just tell you from my own perspective, learning and educating yourself is the best possible thing. Read and learn before you put your money anywhere. Our job here at the SEC is to make sure that people have enough information about companies before they make investment decisions. And if you don't understand, ask questions. I would say take a look at our website, sec.gov and investor.gov. We have a lot of information about things that you should be aware of in terms of different types of assets, but also scams, like questions you should have. Oftentimes, if something's too good to be true, it probably is. So I'd say it only comes through work and practice and actual digging in. But if you guys have questions, you should reach out to folks within our agency, because they're more than happy to talk to you guys.
Okay, thank you. So that brings us to an end of our prepared section. So now we'll be moving on to audience Q&A. So I'll let Ben take over now.
Yeah, so for our first question, some of these were pre-submitted.
Sure.
If anybody has any extra ones, feel free to send them to me in the chat. How did you studying law, how did that affect your job and the background that you have?
It's a great question. So not every commissioner is a lawyer. We've had economists in the past. We've had people who traded before. Our first chairman, I think Joe Kennedy, wasn't actually a lawyer. But I think for me, the reason it was helpful is using my law degree, I was able to interact with companies who were part of the markets. So I did a lot of the disclosure we were talking about, and the papers and the contracts for companies that were selling securities or buying other companies or selling companies. When I worked at a stock exchange, I learned the legal rules. And for me, that created a framework for how I could understand how these policies interact with the law. And so oftentimes when people ask me, why is this the case in the marketplace? Why is this dynamic, happening? And 99.9% of the time, it's because of the law that created it or the rules that created it. So having that background helped me kind of navigate and have a better understanding of how the markets work. So it's not, you don't need to have it to sit in my chair, but for me, that's why it's been useful.
Okay. Our next one was, how does the SEC feel about the inability to regulate Bitcoin and other cryptocurrencies?
It's a great question. So this is again talking about the difference between securities and other digital assets. And so the SEC doesn't oversee Bitcoin. We do see digital securities, and we've had some cases about it, but we've mostly dealt with this through kind of our enforcement rules, which is not a great thing in most regards, because I'd rather have guidance to tell people this is how you can do this. But oftentimes what we happen is people violate the rules that we have, and we basically have to tell people what the law of the land is through enforcement actions. So I'm hopeful for the future that we can actually do a lot more in terms of encouraging people to find a way of how you can comply with our security laws using kind of fintech technology, blockchain, and distributed ledger technology, just because I think that is the future. I think the CFTC oversees Bitcoin, and they feel very comfortable in many ways in that. We, especially futures, we're one where we have a lot on our plate, but hopefully one day soon we'll provide more guidance for folks on what to do in this area, because I think it's just the future, and we should embrace it.
Okay. One of our questions was, how does the SEC handle insider trading, and what is their position on it? Because from my understanding, it has been very difficult within the past decade to prove a lot of insider trading cases where there'll be evidence that's stacked up against people, and a lot of the time things don't even happen to them.
Yeah, it's a great question. So it's again, this is one where we are restricted by whatever the law allows us to do, and it's basically been decided through court cases over time. And it all comes around to whether you have a duty to protect that information and not use it. And ultimately, the courts have gone back and forth on this, but we've gotten pretty good at kind of determining what it is. And if there isn't the evidence for it, we can't get there. But I think it's an area we're constantly going to have to kind of grapple with and think about. And that's a good thing, because no one, I think, in the 1930s would have contemplated the use of Twitter or other things that are just kind of continually present in today's environment, and dealing with some of the issues that we're dealing with today. So I think this is an area where we're being asked to look at, and we're going to continue to make sure that if we don't have the necessary tools to go after people who violate the laws or what we think are wrong actions, we'll either ask for additional help from Congress, or we'll push to pass rules to make sure that we can go after what we think are bad actors.
Okay. This next one was just sent in the chat. It was a question about tipper/tippy liability.
Okay. Wow, this is very, very impressive.
It says, if I were to overhear a conversation on a subway and invest based on that information, does that count as insider trading?
So I can't give you a precise answer because there's more facts and circumstances to it. But as I said, typically what happens is you need to have some kind of fiduciary obligation to keep that information private. And that's like, if you're the CEO of a company, you can't tell someone else, non-public information that they can then use, especially if there's a relationship between that person. They should know they shouldn't. But, generally it's based on that kind of relationship. So you always should look at, well, first of all, if you're worried about tipper and tippy liability, you probably should talk to some people, because you're already in kind of a weird spot. But that, just broadly speaking, that's where tipper liability kind of always comes down to. It's like whether you have an obligation to keep that information to yourself.
Okay. This next one was to address the elephant in the room with GameStop. What are your thoughts on the whole GameStop pump and dump with Wall Street bets gaining popularity on Reddit? And is the SEC planning to do anything with investigating brokerages that tried regulating the stock?
So it's a great question, and obviously that's the elephant in the room. So I'll start right off. Like, I can't talk about individual companies or regulated entities just because we're constantly overseeing them, and until I have all the facts, I can't talk about it. But generally, what I think we're going to do is we actually need to do a deep dive and see what happened. No one has told me exactly what's happened fully to the detail where I think any of us feel comfortable seeing the entire picture. And as I talked to before, like, even though we all know, like, when you push a button to say you purchase or you sell a stock, you're automatically told you did it. The actual way that it actually enacts itself is pretty complicated. And it involves multiple people and multiple businesses that are able to effectuate that, whether it's broker-dealers, investment advisors, transfer agents, stock exchanges. All these are probably words you probably have not that much familiarity with, and if you do, my hat's off to you, because that's really impressive. But the point is, it's a really complicated system, but works incredibly well. And so we need to look at all the plumbing to make sure that, nothing in the plumbing was the cause of some of these issues. And what we're going to do is we'll ultimately put out like a report explaining what we think happened, and then we'll make recommendations whether we need to change our own rules. If we don't have that authority, what we need to talk to Congress. But the key for me is like, we shouldn't jump to any conclusions, and what we need to do is do a deep dive and really understand it before kind of like saying anything in terms of just clear next steps that have to be done. But we're doing it, and we'll get there.
Okay, this next question was very short. It was, how many people are part of the SEC in the various branches?
That's a great question. So we have, I think, almost 4,000 people. And the way we're set up is we have a home office in DC, but we also have 13 regional offices across the country. So New York, Atlanta, Chicago, San Francisco, LA, Fort Worth, Denver, Chicago, I think I mentioned Chicago, Atlanta already too, Boston. We have one in Salt Lake. We have, places essentially across the country. And the reason that's important is because obviously not all bad acts and bad actors reside here in the East Coast. We're spread, that's happening across the country. So what we want is people to be able to reach out to their regional office and alert us of things, and we can bring cases at any time in any state because of it.
Okay. This next one was, how does the SEC's process of investigation change between individual investors and corporations like hedge funds and venture capital firms?
That's a great question. So the way it really depends on whatever the case we're bringing. So we'll reach out to both individuals and corporations. The way it works is we have internal people here who have a list of questions, and they'll reach out, often in writing, basically say, please provide us information on the following. And if it's an individual, it's oftentimes easier to get a response because that person got that quickly. If it's corporation, sometimes it takes longer. But it really depends on the individual or the corporation. But for the most part, we treat it the same, other than if it's more time sensitive, we'll definitely throw as many people as necessary to deal with it, whether it's an individual or a company.
Okay. This next one, it was, if something similar were to happen as to what happened in 2008, how would the SEC react differently?
It's a great question. So, part of it was, there's just some is financial crisis. So we're not responsible for kind of like systemic risk. We're responsible for making sure that the markets work and that companies provide relevant information and protect investors. So we have a lot more tools at place than we did in 2008. We also have a better understanding of the market and relationships with other regulators. So we're in a better place to understand if there's, market dislocations or things that could potentially, have harmed investors, and also pockets of, illiquidity or things that are just bubbles. So we're all, I think, in a better kind of informational state. That being said, like there always could be something. So we're constantly thinking about what's around the corner. What can we do to make sure that we're better informed about what's happening in the markets and preventing potential, problems and failures. So our job is never done, but I think we're better off today than we were in 2008.
And on the point of you saying that your job is never done, one question was, in your personal opinion, what constitutes an ideal fair market, and would you consider the current market to be fair?
That's a great question. So it depends on what you define as fair. Like, look, I think there's one thing I really do believe. I don't think the markets are rigged. I don't think that they're rigged for one group or the other. But part of it is like I have to listen to everybody, and if most people think that the market's rigged, that's a problem. That has to be something we have to address by informing people about what we have in place to ensure that if there is anything that is nefarious or illegal, we're going to address it and stop it. If there's bad actors out there that violate the law, rest assured we're working hard to get them. But I think a lot of it's also educating people about what the rules are, because the rules have to be the same for everybody. So I think what this has done, especially given all of the recent market dislocations and I'd say interest, is it made us aware that there are new investors coming into the marketplace that haven't traditionally been there, and they're able to impact market prices in ways that we haven't really thought of or seen before. And our question is like, okay, how does that change our viewpoint? Do we have to review any of our rules to make sure that, whether our communications rules are enough? Have we done enough to educate people about, certain market practices? Do people understand that, this isn't a game? Like, this is real money, and people, could lose it. It's not just about, unlimited upside. There's also downside. So we're constantly thinking about that. Do I think, the markets are fair? I think markets are markets. They're going to take all the information that they possibly have and then try to come up with a valuation. So, that's one thing that I think we're constantly going to strive for. We need to ensure that, the markets are efficient, fair, and orderly. So, our job is never done. And if people have ideas of why either it is fair or unfair, I want people to come to me and talk to me about it, because honestly, when we're thinking about our next step, it's critically important that I hear from people who are engaged on this.
Okay. Our next one was, what kind of information and documents will examiners and investigators use when they request an examination?
It really depends. So we have all of our market participants have to file certain reports. So it really depends on what the allegation is. If some company is supposedly, falsifying some of their financials, we'll ask for them to provide the history of their financials. If some people are saying that, they have millions of dollars of certain assets, well, we'll say, like, give us the bank accounts that show these assets, or give us the broker-dealer accounts or the custody accounts. So it really depends on whatever we're kind of investigating. But we've been doing this for a long time, and part of what we do is we have routine exams for certain market participants over time, and we take in all of these documents, and sometimes some of these market participants don't have the best policies and procedures, and we'll either point that out to them, or if we think it's something that is a bigger problem, we'll potentially open an investigation and potentially bring an enforcement action. But it's something we've had a lot of experience on, and we'll continue to kind of refine it as we go forward.
Okay, and then I will combine two questions here. One asked, due to the process of technology and more people on social media, do you think what happened to GameStop will occur again in the future? And then the other one was, do you see new regulations needing to be made as there's a lot more social media being used to communicate these things?
It's a great question. So I think it'd be foolish for us to think that something like GameStop can't happen again. I think once this has happened once, we should be prepared for it happening again. And I think the question about whether, we need to review kind of our communication rules is a really good one. As I said, like, our rules are really kind of based on certain principles. And I think there's a brand new dynamic that's being clearly shown at this. Social media and the internet are not something that's new. It's been around for a while, but we haven't necessarily seen it manifest itself like we did. So I think, to me, I haven't made a decision on what needs to happen yet. Part of it's going to have to be the deep dive we're doing right now on the recent market conditions. And based on that and input from people, then I will feel more comfortable about making a decision on what, if anything, needs to change.
Okay. So I'd say in the finance community, at least within traders, the movie The Wolf of Wall Street is very popular. It's seen as kind of an icon. At the SEC, is it referenced often when people are in training? Is it mentioned at all?
I don't know. I mean, I wouldn't. Obviously, that was the story of someone who ripped off a lot of people. So I'd be a little hesitant to kind of glorify it. But I think it's one of the important things is like people need to realize that there are rules in place to prevent market manipulation and taking advantage of others. But I think for the most part, we're always looking out if there's something along those lines happening. I'll tell you, one of the hardest things that I have to do every single week is vote on enforcement matters. And the reason it's hard is because you read about the people who were victims of a lot of frauds. And it really, you wake up in the middle of the night thinking about the victims because it's their life savings. And it's especially the case when it's older people who aren't working anymore. They have less time to recover and often the least amount to lose. And so, I'm constantly asking, what more can we do to prevent people from being defrauded? And to me, that's always kind of the thing in the back of my mind. We're always out there to protect investors, and we always need to think about how do we prevent people from essentially being new victims. So I'm actually happy to talk to our exams team and enforcement about whether they talk about it, but I know in everyone's mind who enforce our rules and our enforcement division, they're constantly on the lookout for people who are taking advantage of others.
Okay. This next one is, does the SEC have plans to investigate the naked short selling that happened with GameStop and investigate the restriction and ability of brokers to lend shares to hedge funds?
It's so I can't talk about any individual enforcement matter or individual company, but as I said, we're going to study the issue closely, and whatever comes out for it will be certainly made public.
What is the differentiation on whether an event is fraud or just incompetence?
It's really, a lot of it is intent. There's something we call scienter, which is, whether you have the requisite knowledge base to make certain actions. But fraud can be, there's certain fraud that, is just on its face fraud. But oftentimes we big part of it is intent. But again, people, it's usually people have an understanding of what they're doing, and if they don't, they're sometimes turning the blind eye when it comes to taking advantage of others. So I hope no one on this call will ever have to ask the question of anyone like, is this fraud or not? Because if it is, you're probably asking a question you probably know the answer to. But it is illegal. It's a legal term and a legal standard.
Okay. What is a common quality you have noticed among each of the most successful securities and how their companies are ran?
Yeah, so again, I don't really talk about successful securities or not, because my job is really not to I'd call being a merit regulator, meaning I decide something's a good investment or a bad investment. My job is to basically make sure that the rules apply, that people have enough information about an investment to make an informed decision on whether to buy or sell. And the way I think about it is like, my role is a little bit different than sometimes some of the states, they have their own regulators. And often example I think of is like, if you go back to the 1980s, Apple had an IPO. And we at the SEC thought that they provided enough information for people to make an investment decision on whether to buy the stock of that IPO. But there was also a state regulator that thought, this is just too risky. I'm not going to let people of my state actually invest in this Apple IPO. Which, if you think about it, like in the long term, it's pretty clear that Apple was fine. So it's a different kind of way of viewing it. My job here is to make sure that companies have enough information. State regulators are the ones who decide whether something is a good company or a bad company for investors to invest in.
Okay. How is the SEC making sure Chinese companies traded on our exchanges are meeting our accounting and disclosure standards?
This is an incredibly informed group. So this is an initiative we've had for a while. Right now, there are certain companies in China that are audited by accountants that one of our self-regulatory organizations called the Public Company Accounting Oversight Board, essentially doesn't have access to the work papers. So we're working on different ways for us to, get understanding and recognition abroad so that these auditors are able to share their work papers with folks here in the US. Recently, there was an executive order. Actually, recently there was a law that got passed, which essentially talked about requiring that companies that are listed in the US that are Chinese-based, that have Chinese auditors, they have to essentially be subject to our oversight or the PCAOB's oversight by a certain period. Otherwise, they have to be delisted. So there's multiple kind of avenues to kind of deal with this. We have obviously Congress stepped in and passed a law, and the president signed it. And then there's also the continual work we're doing here at the SEC and the PCAOB to further our ability to kind of ensure that if companies are using auditors and we can't get access to their work papers, how are we making sure to get enough information that we feel comfortable that there's not things that are inappropriate being done. So it's a work in progress, but there's multiple work streams.
Okay. What kind of industry sectors would you say that you like to invest in?
Again, I can't talk. I'm not here to kind of at the SEC. We don't really pick what industries we like or not. It's just again, our job is making sure that you guys have enough information to, you and every other investor to make those decisions.
Okay. And what would you say you do day to day at your job?
So it's interesting. Like every day is a little bit different. But my job primarily is to, I vote on enforcement matters. I vote on rules and decisions that the SEC makes. That's what we and the 5 commissioners do. But it's also mostly meetings. My job is to be informed about what's happening in the market. So whether that's with people internally or from the externally, you can have a day where you have a meeting early in the morning about an accounting issue, and then the next one is about a large international problem that's affecting a different segment, whether it's broker dealers, investment advisors. You meet with heads of state, you meet with other regulators, you meet with people who represent large pension funds. Each one is just a different meeting on a different topic. And the best part of this job is like literally people come in to talk to you about problems they're seeing in the marketplace, or less often things that are working really well. And your job is basically to listen, take it in, and put this piece together of how you see the marketplace working. And when you're seeing a problem, you push back on certain things people say, and then you inquire more. And then if you see a larger issue, you talk to people here in the building and say, what can we do? And so most of my day is just trying to think about what are things we need to be thinking about to protect investors and to help companies grow. And from that perspective, it's awesome. The best job I ever had, probably the best job I'll ever have. And I'm incredibly thankful to do it. And the other part, which I'd be remiss if I didn't mention, it's getting to talk to folks like yourselves. Like part of my job is to basically tell people about what the SEC does and gather information. So I'm trying to be an ambassador to people to understand that we're here to listen, but we're also here to tell you guys if there's questions you have, come to us. We're better off hearing from you about things that you're seeing, because if there's a problem, we want to know it as soon as possible. And everybody's input is incredibly important for whatever policy we ultimately decide.
Okay. Next one. Do companies that claim fraud on others, such as Citron Research, are they liable for damage caused to a company if they're wrong about their accusations?
So again, can't talk about individuals, and that's really that's out of kind of like the SEC's world. That's more of a civil law question.
Okay. The next one. Are you concerned that greater regulations will deter smaller companies from going public and limit their access to capital?
Yes, I absolutely am. I think we have seen less IPOs in the last 10 years than we did previously. There's not 3,000 companies in the Russell 3000. It's just, the cost of, there are many reasons why there are less public companies, but I think that is a factor in it. But it's not the only factor. It's not the main reason, I'd say, necessarily that people aren't going public. But I think it's something we need to think about. I think as we talked about earlier, one of the benefits of public companies for investors is folks like me and you can invest in them because they're publicly listed. So we want to encourage good companies to go public because ultimately, or not good, companies to go public because then we have a chance to decide whether we think they're good investments or not. So, I'm always open to ideas about, what could we do to further incentivize companies to go public? And then also, what people are telling me are potentially problems from private companies' perspective that make them not want to be public.
Okay, and then we had one or two questions. They're personal ones. They're asking, have you thought about career plans once your term ends as commissioner?
Oh, no, my term ends in 23, so I've got a long time to go, and I just couldn't do it. I couldn't do the job right now if I thought I'd be thinking about my next one. But again, what I'm really hopeful from all of this is, I just want to again say, it's incredible that there's so many of you that are interested in this. I think it's fantastic. I wish I had the initiative and the foresight to be engaged in this. So please continue your quest to kind of get better informed and learn more about investing. 2, I hope this is a good example to you guys that, if you guys reach out, we'll listen and we want to interact. If you guys have ideas, come to us. We really want to hear from you guys, especially because you guys are in an interesting new development, which I think is just an exciting thing, which is more and more young people wanting to invest in our markets. So, come to us with ideas, tell us if you see issues. Some things we can talk to you about, some things we can't, but we'll tell you that. But most importantly, I think you guys can give us insights about whether our rules in place make sense today or whether they're frankly outdated.
Okay. And then let's see if we had any others. What are your thoughts on the Chinese companies that are traded here, but the influence of the CCP having on their stock?
I haven't really studied the issue. Again, I keep on coming back to it. It's like whatever, if they meet our requirements, that's what I always look at. Are they telling investors what they need to know? And we have dedicated people down in this building and across the country who are looking to make sure that there's nothing missing or there's nothing that's inaccurate.
Okay. Let's see. Do you have plans to regulate YouTube finance?
I don't even, I'm not aware of, at least for me, I can't speak for the entire commission. I don't have plans to really regulate anyone until I have a better understanding of how they could possibly be regulated by us. Like we can't just ultimately decide this entity or this new business has to be regulated. It has to fit into something that we've already had like a regulated framework for. So they would have to meet one of the different types of market participants that we currently oversee. And that's how we would approach it.
Okay. Well, I think that is it for our questions. I will let Rahul close it off. Actually, I think we have one last one. Do you think that hedge funds with large technology budgets have an unfair advantage over individual investors?
It's an interesting question. I guess first of all, it's important to remember a couple of things. One is there's always been different market participants in the marketplace. And sometimes hedge funds actually also represent pension funds who ultimately represent ordinary investors. I think the beauty of this marketplace is, under our system, there is enough information in our in the public company disclosure regime that people can make their own determination about whether something's a good buy or not. Having more money and resources always is helpful, but the point is always like, are we making sure that the playing field is level enough for people to compete on it? So it's one of those things we should constantly think about, but that's kind of like that's how we approach kind of our disclosure regime and making sure to, someone earlier questioned like whether things are fair or not.
Okay. And I will let Rahul close it off here.
Thank you very much. If you have any questions, please stay behind and ask or send me an email. I believe you have 3 different addresses you can send it to because we did send out a lot of emails. Make sure to check out StreetFins once again at www.streetfins.com. All our social medias are at StreetFins, so that's another great place for you to learn more about us. And yeah, thank you very much for joining. Thank you, Mr. Roisman, for taking time out of your day. And thank you for everybody else at the SEC who made this event possible.
Thanks very much. Thanks for having me. Take care, everyone. Stay safe.
Thank you.
Bye.